Hi, my name is James Robinson, and this is the second installment of the Extrinsic Value blog. It seems to me that we should start talking about my portfolio. If you're going to have a blog on investing, then it seems to me you can't have any credibility until or unless you go on record as to all of your positions. It's too easy to cherry pick your winners and talk about them and make yourself seem like a genius if you haven't told everybody what all your positions are and at what price you bought them so they can have a measure of your actual performance. So at least to start, I'll be totally open about all my positions, when I buy them, at what price, when I sell them, as well as the reasons why. I will also discuss my methods and reasoning behind my investments. Eventually, I will be much more in-depth as to my thinking, but for now, I'm just going to give you the broad strokes as to which stocks I own. As of today, 100% of my portfolio is my money. I manage no money for any other people. It's not really something that I'm thinking about doing, especially not for the short term until I prove myself. This portfolio is made of extra money and does not include money that's in my retirement account, which is invested extremely conservatively, or the kids' college fund. Nor does it include sensible business reserves for my day job, which, as I've said, is commercial real estate. While the amount in the fund is not insignificant, especially to me, neither is it a very significant part of my net worth. The amount is between $100,000 and $1 million, which makes up about 25% of my net worth. Roughly 75% of my fund's available assets are invested. The other 25% is in cash. That's not because I have some goal to keep 25% in cash. It's simply the way that it's worked out. I'd be very happy to be 100% invested, and that, in fact, is my goal. Construction of my portfolio. My goal is to have 15 stocks, which I call my active stocks. Active stocks are those stocks which I have purchased, but which are in no way permanent. I have a goal price for every stock at which I would sell the stock. The goal price is typically 115% of the purchase price. I also have what I call inactive stocks. These are permanent or semi-permanent positions. In general, when a stock goes up by 15%, then I sell my original investment and keep the profit invested in the company. That 15% profit becomes the permanent or semi-permanent position. I'll go into the logic of this approach in a moment. Right now, this is what I'm working on. It's experimental. I haven't been doing this for 20 years, so we'll see how things go as the years progress. My current portfolio of active stocks is Eagle Pharmaceuticals, Sega Communications, Apple Computer, Westwood Holdings Group, Thomson Reuters, Williams Sonoma, Wabash National, Argan Inc., Procter & Gamble, Gilead, T. Rowe Price, Value Line, and Viad. Now, eventually, I plan on going into in-depth reasoning as to why I bought each of those stocks and the logic behind it, what I found so attractive. But for now, just understand those are my positions. And this is the percentage of the portfolio that those positions make up and the purchase price for those stocks. So almost all of these stocks have been bought in the last 150 days, and they were all bought at the price that you see here, so you can start to measure on your own if you want to do the research how well each of those stocks has performed, although I will try and keep you updated on a monthly basis of how things are going. So part of my philosophy comes from following other people, and I lean heavily on a gentleman named Manish Pabrai. And Pabrai's thoughts on selling, I think, are really educational. One of the points made by Manish Pabrai is that we often sell stocks too soon, and in doing so, we miss the chance for the big home run. Manish's goal is to buy deeply discounted stocks and have them double or triple. Even with this 2x or 3x return, he laments the 20 times or 50 times, even 100 times companies that got away. The ones that he made a nice profit on, he sold and went and did something else with. But if he had only kept them, they would have been true home runs. So part of my goal is to amass a library of such stocks, say 100 of them, all solid companies that I can literally hold forever. In this way, if one of them goes to 100x, I double my total fund, plus whatever returns I get from the rest of the stocks. But I don't want to simply invest in 100 stocks, as I have no idea how to pick 100 winners. It's simply too many stocks to pick as winners at any given time. So what I've elected to do is let the stocks pick themselves. My goal is to have a portfolio of 15 very solid, reasonably cheap stocks. When they go up 15%, I'll sell the principal investment, reinvest that in another stock, which I hope is cheaper, and I'll let the profits ride forever. In this way, over a few years, I hope to have a fund of 50 to 100 stocks that I'm invested in for the very, very long term. In the meantime, I reinvest the dividends, make new cash investments for my income, and the fund will grow over time. So currently, these are the stocks which are inactive for me. Williams Sonoma, Extrinsic, what I'll read, United Therapeutics, Net1, UEPS, and Delta Airlines. And in fact, as I'll be reporting in a couple of weeks, I have a couple more that have gone up and sort of reached that threshold while I've been working on this presentation. And my positions are relatively small. As these are the prices at which these companies transitioned from where I bought them into the 15% gain portfolio. Now, by the way, I wouldn't be surprised if these stocks in the short term drop. After all, they've just gone up 15%, right? So I'll be patient with them, and if they start to go down a little bit, I won't care because they're permanent. I don't even look at them month to month, let alone day to day like I do the rest of my portfolio. And you can see there's such a small percentage of my portfolio that really who cares? So those are the stocks that are my inactive long-term holdings. I look at it like I have no basis in these stocks, right? I basically bought a stock, held it for some period of time, probably made some dividends while I held it, and then sold it and got all of my money back. So I look at it as if I have no basis in these stocks. I plan on holding these stocks as long as possible as long as they remain solid companies, or until they become outrageously priced to make no sense. If something's 50 times earnings, I'm selling it. I don't care. But if it stays at 10 or 15 or 20 or even 30 times earnings, I'll probably just hold it forever and see how things go. Once a stock goes into an active portfolio, I literally try to forget that I own it. I don't want to be looking at it. I don't want to be thinking about it. I just want it to do what it's going to do. So I look at the price maybe once a quarter, and I'll look at the financials once a year to make sure that the company isn't falling off a cliff or being poorly run. So my goal here really is to wait. So that's my portfolio. I hope you find it interesting. I'll be posting next week as to what's happened in January and how my portfolio has performed, and give you some more information on those stocks. I will follow up on my thoughts on investing, on Warren Buffett and his strategies, and I'll also start going into investments and why I'm making those stocks over time. Thank you very much for your attention.